let's take a look at some of these ROAR scores. And I'm going to start with the sectors. So remember, the way things work with ROAR, and hopefully if you're getting the almost daily ROAR posts, these shorter bites on finding a stock or an ETF or a sector or the market as a whole and commenting on it. We're in a transition period right now. It seems like we have been for the better part of the last several months. And so you will get things that maybe are leaning here, like XLRE, okay, the REITs. Well, the REITs have been trending a little bit higher, okay, and you can see that. But going back to what I think is the dominant trend, okay, even an 80% ROAR score, 80 is not 100, gang, okay? And so I am always looking at things with, if you will, a jaundiced eye. Let's go back to the last 6 months here. Okay. It's great that it has cleaned itself up, but more and more what's happening is things really start to look like they're breaking out, like the REITs here, and then they fail. And let's look at the traditional chart so I can pare that back. Okay. Well, as you can see, it was getting there. That's a good sign, but then boop, done. See, this is what I looked at before. I think I even mentioned this in the newsletter this week. Okay, you can get a move from 40 to 44, 10% like that in REITs. I remember when REITs would not move 10% in 6 months, ever, ever. They were widows and orphans, as they used to say. They were like owning bonds, but with a little bit of equity upside, and you're actually buying them for the underlying real estate value. Fundamental analysts still wax poetic about that, but then how do you respond to this? Okay, that the REIT sector is hopping up and down like this, totally not immune to anything that happened last year around this time. Uh, Acting like REITs did for a while and then popping up and getting overvalued as I can see it so quickly. And yeah, there's some yield in here, but on a price basis, this is still 20% below where it was at the end of 2021.